Hello everyone, this is Arban. I'm happy to see you all in another video. Actually, this is the follow-up video to the weekly forecast video which I shared with you on Tuesday, January 20th. In that video, I shared my thoughts on the fundamental news events which are yet to be released this week and how it might impact the market. And also, I shared my technical forecast on GBPCHF and SP500. In this video, let's see how the fundamental news events which released this week affected the market. And also, let's see how GBPCHF and SP500 has developed now. Before we begin, please note that trading forex and CFDs involves a high level of risk and may not be suitable for all investors. The analysis and opinions shared in this video are for educational purposes only and do not constitute financial advice. Past performance is not indicative of future results. Always manage your risk carefully and trade responsibly. So we started the week on Tuesday with the UK unemployment rate and the Eurozone current account. UK labor data gave us a clearer picture of employment stability and wage-driven demand, which influenced expectations around Bank of England policy, and it drove volatility, among the GBP pairs. Meanwhile, the Eurozone current account provided insight into capital flows and external demand, helping shape sentiment in euro pairs, especially against the dollar and the pound. Wednesday was the most macro heavy day of the week. Actually, in the US, housing starts, building permits, and pending home sales gave us a read up on how sensitive the economy is to the interest rates. Housing data is closely watched because it often leads broader economic momentum. At the same time, UK CPI was the key focus. Inflation outcomes directly influenced the rate expectations, with the GBP reacting to whether price, pressures showed the signs of easing or persistence. The combination of growth and inflation data created notable volatility in both USD and GBP pairs. On Thursday, market reacted to the US GDP data, which helped refine expectations around economic strength and recession risk. Even small revisions here can impact bond yields, equities, and the dollar. We also saw Japan's CPI, a crucial data point for the yen and the Bank of Japan's policy outlook. Inflation trends in Japan remains a key driver for JPY volatility and broader Asian market sentiment. Friday wrapped up, actually today, we wrapped the week with retail sales from Canada and the UK. These figures help confirm whether consumer demand remains resilient, which is essential for economic growth. But both CAD and GBP pairs responded as traders assessed spending strength and future policy implications. So these are the news events that released this week, and this is how they impacted the market. Now let's see the technical forecast of GBPCHF and how it has developed now. So on the daily chart, we had a strong bearish momentum, and the price was currently in a corrective structure with the price reaching the strong resistance zone. Actually, this was a strong support zone. And after breakout, it is now currently acting as a strong resistance zone. And I mentioned that until this zone holds, I expect bearish continuation. Moving down to the H4 chart, we had a bearish divergence here with the price creating higher highs and the MACD indicator creating lower highs. And also we had breakout of the most recent uptrend line. So the bears were in control in the GBPCHF based on the daily and H4 time frame. Moving down to the H1 chart, we had a strong bearish momentum, and also the price, which was moving lower, has broken below the most recent uptrend line, and the price has also created a bearish trend structure in the form of three lower highs and lower lows. As you can see, I have marked in yellow. So my view here was I was expecting correction towards the marked resistance zones in red, and the price to continue lower further. Now let's see how the market has developed now. The correction that I was looking for is happening now. So my view still remains the same here until both these strong resistance zones, that is marked in red holes. I expect the price to move over further. So now let's move on to SP 500. On the daily chart, we had a bearish divergence here. As you can see, I marked in yellow. The price created higher highs and the MACD indicator created lower highs. And also the price has broken below the most recent uptrend line. So the bears are in the lead. On the H4 chart too, we had a bearish divergence followed by the most recent uptrend line breakout. So it's bears all over on the SP 500. And on the H1 chart, we had a strong bearish momentum. So I was expecting a bearish continuation after pullbacks towards the key resistance zones that have marked in red. So now let's see how it has developed now. Currently, the pullback that I was looking for is happening, and the price broke above the first key resistance zone, and it is currently, dancing around this zone. So my plan still remains the same here until both these key resistance zones hold. I expect the price to respect these zones and potentially continue lower further. So that's all for this week. Hope you had a great trading week and hope my forecast video helped you with your trading. I'll see you in the next video. Until then, it's Arvind Akash signing off. Bye. Have a great weekend. Cheers.